What's up guys, welcome back to my channel. My name is Sam and on this channel we strictly look for value stocks. Now one of my favorite stocks is Overstock and I've got a big update for you guys to understand exactly what's been transpiring over the last 6 to 8 weeks now. Obviously this business has gone through a very volatile period in terms of its share price. However, I think there's massive tailwinds and we're starting to see the macroeconomic environment improve in the housing market particularly. So the first big change is going to be the ticker symbol. Obviously, we've moved all the way from OSTK to now BYON with the ticker BYON. And this is because we've moved from the NASDAQ to the New York Stock Exchange. And to reinvent Overstock as a whole business, we've obviously moved to the Bed Bath & Beyond brand to help drive greater sales. And I think this is a fantastic idea. Reinventing that from that Patrick Byrne era is a great way to separate new investors from old investors. We can bring on new investors without having to worry about the legacy and unfortunately the rubbish that Patrick Byrne left behind. So this is the first thing. Now, the other thing is obviously the share performance. Obviously, over the last few months, over the last 6 months, it's been very volatile. However, we are almost back down at $17, all the way back up to $19 in this recent rally now. So I mentioned in my last video around Marcus Lemonis. He's one of the biggest investors around at the moment, CEO of Camping World, and he's recently made a director in Overstock or now BYON. Now, not only this, we had some great news come out just yesterday around that he will now serve as the co-chair of BYON with Alison Abraham. Now, Mark Cahodas has been very noisy in terms of wanting to get Alison Abraham out of the business, and this is going to be one way where potentially a transition of leadership can happen, where Marcus Lemonis is going to drive performance, align shareholders, which is going to be vital in improving the share performance, because I don't feel like the legacy board has particularly helped in this area. And I think the experience and the wealth of experience that Marcus Lemonis actually has is fantastic. And he's going to be the right man for BYON to get into the next stage of its phase. Not only this, I think that he also owns more shares than most of the board combined, which is very scary considering he only joined around 6 to 8 weeks ago now. So this is a great development. And I think he said that obviously his main thing is to help with the restructuring of reducing costs, evaluating different lines of business, and then ensuring that the capital allocation while driving revenue is going to be important through that increasing customer base. Now, recently I heard a question about Overstock and whether or not they can get back to kind of 2020, 21 highs where they were doing close to $2.7 billion in revenue to $2.5 billion in revenue. Now, the short answer is very simple, and that's a definite yes, in my opinion. The way this business is structured has taken all the fixed costs out, and we can see this in the gross profit margin. Now, if we take a look at the gross profit margin, back in 2018, 2019, it was at that 18, 19, 20%. And then it automatically jumped from 2020 to 23%. Now, the reason for this was because Jonathan Johnson basically took out all the fixed costs of the business, made it an asset-light business, and it's a much more variable cost basis. So this gave a much better profit margin, making Overstock better for its profitability. Now, if we take a look at the cash flow, this is also shown in the cash flow statement. So I believe they can get back to 181 million very easily. That will just take a little bit of time for that housing market to improve, housing sales to improve especially, and maybe an interest rate to come down ever so slightly. Now, one thing to consider is also that Overstock has a massive cash pile, and they'll be able to generate more sales, activate that customer list, because they plan on spending around 150 million in that marketing expense to help drive further sales. Then you include the Bed Bath & Beyond customer list, which has almost triple the amount of Overstocks. This is a massive development, and I actually think will exceed $3 billion in probably 2025, in my opinion. I think as soon as you start to see sales increase, the way that the business model works is it doesn't lose a lot of money in difficult environments, but it's going to make a significant amount in the future. So another thing which I thought was really interesting, which was on the earnings call back in November, and that's when Jonathan Johnson said that they were actually planning on bringing Overstock Legacy brand back as a separate website for liquidation products, which is exactly what it was used for. Now, I thought this was a great idea. I originally thought that merging the two businesses, you were going to lose some of that customer list. And they did mention that the only reason they did that was to ensure that there was a seamless process in getting both websites basically running through the traffic exactly what they wanted. However, I think they soon realized that they do want the second business or website up and running. That way, you have two funnels for two different types of people. You have the legacy Overstock customers, and then you have the Bed Bath and Beyond customers. Now, you're not neglecting any of those. You can drive sale funnels, and that's just going to help with the business overall. Now, the recent news that Jonathan Johnson obviously left back in early November, I think the main reason which was down to his downfall was that bad PR, and the earnings call just wasn't good enough, in my opinion. One thing that I really wanted to hear about further, and I'm sure many of you guys did, was the Medici Ventures portfolio. Now, this is a lot of reason why many people are even invested in Beyond at the moment. So to not speak about it and kind of put it to the side is not what we want to see as shareholders. We want to hear about these businesses that are performing well, kind of see if there's a valuation we can kind of tie to it. I understand it's very speculative at the moment. However, this is something as a shareholder that we really want to hear about. And I think that was the main reason why, unfortunately, he left. And only that, the performance as well, considering the Bed Bath and Beyond deal. I know it had only been maybe 2 to 3 months of the actual integration. However, it just simply wasn't good enough. The revenue numbers were far too low, especially when you compare it to something like Wayfair, where same market environments, but their numbers never seem as bad as Overstock's revenue numbers. And I'm very bearish on Wayfair. I think it's a rubbish company. But yeah, I think with Marcus Lemonis coming in, I think he's going to be a big help driving this. And he can also bring in better talent for the CEO. I think that's one thing that people don't consider. I think JJ did a great job. What he did in terms of taking that fixed cost out of the business, turning it into an asset-light business model. I think we've got a winner, and I think he was fantastic. And I thank Jonathan Johnson for that. But I do think the next stage of Overstock and Beyond now is going to be in a much better place without him. So, in terms of what the current situation is with Overstock, if we take a look at the 30-year mortgage, we can kind of gauge the difference in share performance and why exactly Overstock has performed as the way it has, essentially. Now, if we take a look at kind of the 3 to 5 year in terms of mortgage rates, we can see from 2022 all the way up to 2023 now, the mortgage rates have gone from 3% all the way up to 7.79%. Now, 91% of US consumers are on long-term fixed mortgages of around 30 years. So why would they want to move when they know that, one, house prices are at all-time highs still, and there is a lack of supply in the housing market? Then when you consider they have to actually pay more in terms of mortgage rates as well on their monthlies, it's just going to be a recipe for disaster for the housing market. And I think many people would have decided that, housing stocks, retail stocks such as Overstock would be a no-go. But I think there's a massive opportunity in this area, especially when you consider that other companies are going out of business and you have mortgage rates potentially looking like they're going to roll over now, especially as we kind of get to the tail end of 2023. It's looking like interest rates and inflation is coming down, and that may then improve interest rates for next year, helping the mortgage rate, of course. Now, this chart may look very similar to a lot of people, as it looks like it correlates between Overstock's chart to existing home sales, which is what we're looking at here. From back in 2022, they were doing around 6.5 million existing home sales in the US. And you can see it's fallen off a cliff as interest rates have gone from 3% to almost 7.5%. We can see that we're obviously still very much in a downtrend. However, when we take a look at it over 10 years, then you can see it's already at an all-time low. Then if I actually increase that to 25 years, as far back as you have to go to get to kind of under 4 million in terms of existing home sales, you're almost back at the 28 to 2010 housing crash, where obviously we had the great financial crisis with the housing market. Now, obviously, a lot's changed since then. We've obviously got more people, higher population, more houses have been built. So, this existing home sale chart will eventually normalize back up to a reasonable rate. In my opinion, when interest rates start to turn around slightly, as the US credit is so high at the moment, with default, with the potential with these high interest rates, I think they have no option but to eventually pull back on the interest rates and cut it slightly. Now, even if we see a slight cut, you're going to see mortgage rates drop off a cliff. And this will probably normalize back up to a higher level of around five, maybe 5.5 million in terms of US sales. So again, I've not even spoken about Medici Ventures and all the good that's been happening in companies like Grain Chain and T Zero. I'm hoping next year is going to be the big takeoff year for T Zero, especially with David Goon saying that the technology is now ready. But this is something still inside, and I don't even need to consider this to understand that Overstock or Beyond right now is seriously undervalued. I think once they get back up to 150 million back in free cash flow, as soon as existing home sales starts to increase, then you're going to see Overstock's expansion in terms of its share price. Once you start to consider the numbers, if you slap a 20 PE or 20 to free cash flow on Overstock, or where they're doing 150 million, you get to a $3 billion actual valuation. And considering the market cap is only around 800 million now, if you include the cash, you're basically getting back up to about $80 a share. And that's not including Medici Ventures. That's including just the legacy business. So, and you could argue that they may even do further than that, considering the new Bed Bath & Beyond deal, where active customers and the customer list is 3 times larger than Overstock's. So just some numbers to consider. Obviously, it will take a little bit of time for the business to improve. But I think that buying in now and just holding, waiting for the tailwinds to pick up in terms of the macro is going to be very beneficial for the future as a shareholder. Then you've got Marcus Lemonis in the middle of all this. I think he's going to be a fantastic guy to drive sales, drive share price performance, and align this business to a much better place. He's obviously very much well invested. I think his share price is around $15 a share, and he does own quite a lot. I think he owns over $1.5 million worth, which is not that much for him, but I'm sure he'll probably be picking up a few more shares over the next kind of few weeks and few months. So if you guys enjoyed this update, make sure to smash a like button. Let me know your thoughts on Overstock, what you expectations are for it. And I'll see you guys in the next one. Any further updates, I'll make sure to drop another video. Enjoy, guys. Have a good weekend, and I'll see you in the next one.